This market is clearly bullish, came to the 88% and turned around not once, but twice. That's the beautiful thing about trading. Once again, it's respecting the Fibonacci. I also like the fact that this area, we have a memory line right there. We want to make sure we have multiple confirmations. I can use this information to predict where it has the probability of turning around. RGTI, Rigetti Computer Inc. Let's look at this stock here. So rumor has it Trump is involved with this stock. So let's see if we can figure out what's going to happen. I just want to see when earnings are coming out because that's going to make a difference. So, all right. So they just had earnings on this week, Monday the 12th. So earnings is behind us. And so we can get that information there. The next one is in August. So we're good. So looking at this now from a purely technical standpoint, we can see this stock has gone as high as 21.40 and as low as 37 cents back a couple of years ago in May 2023. And the high was back just in January. So this stock has jumped around quite a bit, as we can see. I will go to the 2 hours. We'll go to the 2-hour chart to give us a little bit more information. And here it came down to this level at around $6 and shot up here to around $16. And I want to see where it came up to. So if I take a Fibonacci, so it passed the 61% Fibonacci, went past it and came back down. It came to, as I've always said before, I love using the word apologize. It came to apologize and say, hey, sorry I blew by you the last time, and came and then decided to come down. And that's all part of the storytelling when you look at a stock. So I like the fact that it did that, and so I can expect the stock to continue to do that. Now, from this high to this low, it came down here, and I want to get a sense of where it came down to. So here, this is great because once again, it's respecting the Fibonacci. It came to the 88% and turned around not once, but twice. So that's great. It just gives me confidence that my analysis will work with this stock and it's respecting it. Now, it doesn't mean I'm going to take a trade just on one confirmation because that's not what we do. We want to make sure we have multiple confirmations before we jump into a trade, of course. So let's try something else here. So just looking at this, I can see that it came to this area here. I just want to see how the Fibonacci's are being respected, the secondary lines, so to speak. I just want to see. And so, like I said, this is just additional confirmation that Fibonacci's are being respected, the Fibonacci ratio. So that's good. Okay, so now having said that, let me remove this drawing here. And I want to go to this high, to this low, and I want to see what happened there. And look at this. It came to that 61% Fibonacci twice. From this high to this low, it went up 61%. So that's good to know. Once again, like I said, it's respecting the Fibonacci's. That's excellent. So what I want to do now is I want to take a Fibonacci from this low to that high to see where it's going. Now, for me, if it comes back up, then I might consider shorting it because you have the rule of 3 and the trend line. So I may consider shorting it if it comes back up again, but I would have a tight stop loss. That's the nice thing of when you have 3 hits like that. So my stop, if it starts to go above that area, I would be out. Let's say you jump in, you're able to jump in at 12.50. If it gets up to like 12.90, I'm out. So your losses would be very tiny because the reason why I suggest this is that when the market comes up like this, it could mean that it wants to go to the next Fibonacci line. So you got to get out of the way because you are going against the market. This market is clearly bullish. And if you're going to go against this market, you better have a tight stop loss. But if you are right, typically you're going to have a big correction because of it coming there 3 times and being rejected. So that's one for the bears. Okay. For the bulls, for those of you that are bullish, well, let's see what we find out here. So from this low to this high, we have a market that came down past this 11% Fibonacci, and it's making its way to this 23% Fibonacci line. So when I see this from this time frame, from the 2-hour chart, I would surmise that it's coming down here. And so what does that mean for us? Well, we can either short it if you can get in at a good price, or be prepared to buy it up. But I want to get a few more confirmations before I jump in and buy that up. And I want to make sure there's enough money to be made if I do decide to buy this up. So my risk to reward has to make sense. So I'm going to go to the 15-minute chart and see if I can see anything here. So on this 15-minute chart, we've got a lot of anchor points we could consider as we do the Fibonacci's, and then we could look for confluence. So I'm really liking the fact that we have all of the anchor points that we can use, which will allow us to see if we do in fact have any confluence. So let's try this one here. And once again, there's no right or wrong. Just I like anchor points that are very pronounced. And this went up there, came down here, went up there, came down. So these are very pronounced points. They're all very good, quite honestly. So I will start here, and I'm gonna change the color so we can see what's going on. And right away, you can see here, you've got some action happening here. If the market was to come down here, that would be a pretty good area to consider. And just visually, I think this looks like an 88% if I take a Fibonacci from here. So why don't we do that? From this to there, yeah, you've got an 88% Fibonacci line in that area there. So this area is looking really strong for me. And why I like it as well, I could have a tiny stop loss. I could say if I jump in, let's say at 10.27, okay, 10.30, okay, $10.30. If it does come maybe to this low, if it comes down to $10, I would exit, maybe I say 9.86, right? If it comes here and forms a double bottom, then maybe I consider exiting out. And the thing is though, for me, this is dynamic. So as it's coming down, I can use this information to predict where it has the probability of turning around, the highest probability. So on top of the fact that we have an area of confluence here with these 3 Fibonacci's, I can use this area later on as it gets closer to decide on where my entry point in, thus making it so that we have a tight stop loss, so that we can enter this trade with confidence, we can size up, put a lot more money at risk, and then have a tiny stop loss. I also like the fact that this area, we have a memory line right there, right in that area. So there's a lot of things happening in this area that would make me want to buy this. And the fact that it hit that 61 twice tells me there's upward pressure. If this was to come down here, this would be an excellent buy for me. But I'm not done. Anyway, let's try a Fibonacci here. Let's see if we get any additional confluence. That would be amazing if we did. And so let me change the color to red. No, we don't really have any other confluence, certainly not from there. How about if I do it from here? Just going to move that there. No, nothing from there. I'm going to put this back there. So I still like this area here. I can see as well when I do this, we do have other areas like right here. You've got a 76, you've got a 61, and an 88. So could it come down here? Sure. But it could do something like this and then go up and then maybe come down and then whatever, right? I mean, we don't know. We just play the probability game. We make sure we have a tight stop loss in case it goes against us. And then we just wait for the next level. We trade level to level when we do this. And so I've got 2 areas to consider. I'm going to put an alarm right here in this area. And just if it does come down, I will consider jumping in at $10.30 area. Okay, so I would consider doing a call option in that area there. I'm going to make this so that it does not expire. Okay, so there you have it. That's my alarm if it comes down to that area. It may never come down. This might just turn around and just keep going up, or it could go back there and then come down. So there's a lot of possibility. Does anyone think I'm going to lose any sleep over this? No, absolutely not. I've got all kinds of alarms, and when they come or when they get triggered, I just analyze it and then I decide whether it's worth my while to take the trade or not. And so that's my analysis thus far on this one here. In fact, let me just put this here. Actually, I'll put a fresh one. I'll just check this one last thing just to see if we have any other areas that are calling to us. You do have an area right here. You've got a 76, a 61, and a 50%. But for me, because it's so close to this 38, this thick blue 38, this is the big one, or rather the grandfather Fibonacci. Because it's so close, I would consider jumping in sooner, absolutely, because the probability of it breaking this area and then breaking this area is very small. So if you wanted to make sure and get in, then you might consider jumping in sooner and then having a stop loss, like I said, just below that area, just a tiny stop loss. So if it does go against you, you get out of the trade. And if it does not, well, then you're laughing. So, but for me, because I've got so many alarms and I don't follow the stock, I'm only doing this because you guys asked me to analyze it. I'm just going to put the best trade possible that I see right now. And that's the best trade for me. I like the fact that it's at a grandfather 38, and I've got all the other smaller Fibonacci's or secondary Fibonacci's that align with that area. And I think that's it. And by the way, before I say anything else, not to say there are not other trades here, guys. Like, look, you've got a memory line right here, and you've got a 38, this red, and you've got a 61. So could it come here and turn around? Yeah, it could. Absolutely. But that's the beautiful thing about trading. It's a personal thing. Where do you want to take the risk? For me, I want to wait until it gets here, if it ever gets here. And that's what I feel comfortable with at this moment.